Hi everyone, welcome to Investing Club. In this video, I'm going to be talking about the Federal Reserve's recent meeting and about certain actions the Federal Reserve will take and how that has been impacting the stock market over the past couple days. So today was down huge for the stock market, the Dow was down over 6%. The Federal Reserve just had their meeting the day before this happened. So something in the Federal Reserve meeting likely accelerated this sell-off. And so right now I'm on the transcript of the meeting, and it has everything that Jerome Powell said, and I'll put a link down to it in the description. It's a good idea to read through the whole thing if you're interested about the direction of the economy. And I'm going to jump right down to the question and answer session, because the first few pages is Jerome Powell giving his prepared speech. And of course, it's always going to be the same thing from the Federal Reserve. It's going to be they're encouraged by the signs. They're going to keep supporting the economy, doing whatever they can. And it's basically just a pump-up speech. The main purpose is to keep confidence in the stock market and in the economy, since that is their job after all. But once we get to the question and answer, this is where people can actually ask what they want to know, and Jerome Powell has to answer them. So I think that's where we'll find the most insight. And so we have the first question here, and this one is about the economic conditions and what the recovery is going to look like. And Jerome Powell firstly says, as a baseline expectation, there will be no rate increase through 2022. And this is very interesting. The Federal Reserve and Jerome Powell don't see a economic recovery for at least 2 or 3 years. In his prepared statement, he said there's going to be no V-shaped recovery. It's pretty obvious. The economy is not going to bounce back like it was at the beginning of this year. We're going to see, it's going to be a slow process, and we're going to see a few years before we get back to where we were. So there's going to be no rate increase through at least 2022. And the next question is about inflation. She's asking about the inflation forecast, and this is something that I've said is going to be a consequence of the Fed printing all of this money. There's going to be inflation as a result of this, and the more money they print, the worse the inflation is going to be. And Jerome Powell, all he basically says is we've had interest rates low before, and we were doing quantitative easing back in 2008 and 2010, and we didn't really see inflation then. So, this time it'll be the same and we won't see any. And I think that is not really true. I think that it's inevitable that we're going to see inflation, right? So Jerome Powell's not even acknowledging the possibility of a huge run-up of inflation, which in my opinion will happen soon. And it could get pretty bad depending on if the Federal Reserve is forced to print more money, if we see another decline in the stock market. And then we have another very good question. How firm is the commitment to lower interest rates? And Jerome Powell says something very interesting. He says, we're not even thinking about interest rates. We're not even thinking about raising rates. So this tells you that there is no thought in the Federal Reserve in Jerome Powell's mind that they will be raising interest rates anytime soon. And this is an important point because they could have said something different. They could have said, instead of we're absolutely not raising rates, they could have said we're watching the economic conditions closely, and if we do see a increase in economic activity and the need for 0% interest rates won't be there anymore, then we might consider raising the rates. But they did not say that. They said we're not even thinking about raising rates. So that's not coming. There's going to be no raising of interest rates. And this right here, this statement is probably one of the most bullish things for the stock market in this whole press conference. Investors should have been happy about this and stock prices should have went up, but we didn't see this. We saw a big crash in the stock market over the past couple of days. And so it's really unclear why that happened. When you see a statement like this, we are absolutely not even thinking about raising rates, that's something that should be seen as an extreme positive for the stock market. This is a good news that the stock market was supposed to be waiting for before it kept going higher. Higher interest rates was a huge concern back in 2018 when we saw the crash at the end of 2018. Interest rates were slowly creeping up. They got above 3%. Everyone freaked out and everyone started selling off stocks. And then the Federal Reserve said, all right, hold on. We'll start lowering rates again. And that's when we saw the crash end. So this should be an extreme positive for the stock market, but we didn't see it that way. And then the last question is probably the best question of this whole press conference. This question is, given the level of the markets right now, do you feel that there's a bubble inflating right now that could pop and set back an economic recovery, or that we might see capital misallocation as a result of this seemingly impossible stock market climb? And so, of course, the answer for me is yes, of course there's a bubble. That's not even a question. Capital misallocation is probably happening. We see it all the time. Most recent example, Hertz is up 825% as Robinhood traders file in. Hertz is a company that is going to default on their loans. It's not even a question. They've come out and said it. Robinhood investors jumping in, pushing up the price by an extreme amount. This is a chart that shows the price of Hertz compared to the amount of Robinhood users who own the stock. And it's just pretty insane for a company like, and this right here is exactly why I don't care if airline stocks are going up. I don't care if the cruise line stocks are going up. I'm not buying them because they're not good companies and they're not in a good industry. I don't care if the stock's going up because the reason it's going up is because a bunch of kids are buying up the stock for no reason. Right? And that's not how I invest. So anyway, we get back to this question, and Jerome Powell, I'll leave it here so you can read through it, but he basically goes off on some sort of tangent, and he doesn't even really answer the question. Of course, they're not going to come right out and say, yes, we helped create the biggest bubble in history, but they're not even acknowledging that they're part of the problem. And it's worth noting that the Federal Reserve is one of the main causes of the largest bubble that's in the stock market right now. And I said it in one of my last videos, stock buybacks are the biggest bubble in the stock market, and it's about to pop. And why was that even a bubble in the first place? Is because interest rates were so low for so long, companies just said, hey, I can take out a bunch of debt and buy back stocks and artificially increase my earnings, and that'll make our stock price go up. And that was only possible due to the Federal Reserve having interest rates at zero for so long. Now, again, they just lowered them back to zero. It's not going to be like that forever. Once we see inflation start to kick in, they're going to have to raise rates to combat that. And if they don't, the inflation is going to get out of control, and that would be even worse. So that's worth noting. The Federal Reserve is the one who caused this bubble in the first place. Rates were at zero between 2009 all the way to 2015. Rates were at absolute zero. And then, as I said, at the end of 2018, they finally started to creep up above 2%. And that's when the stock market freaked out and we saw a huge 20% decline in a very short amount of time. And that's where the Fed said, all right, obviously this isn't working. We're going to have to lower interest rates again. And so that's what happened. And, the more money they print, the more inflation there's going to be. Inflation isn't here yet, but there's a very good chance it's going to be coming very soon. And once that happens, they're going to have no choice but to raise rates. And that is going to set off a massive wave of defaults as companies cannot repay all of the loans they've taken out for stock buybacks. And so we can see what's happened in the past couple of weeks. Since the beginning of June, the dollar has been hammered. They had a bit of a relief rally, but I expect the dollar to continue to fall. There's already a huge supply of US dollars. There's no supply problem. All the dollars that are needed are already out there, but the Federal Reserve just keeps printing and printing more. And so what I think is we're going to keep seeing the dollar go down. And at the same time, gold has been going up as the dollar has been going down. We saw a down day for gold today, and that is just because in a huge red day like this, where we're down 7%, everything's going to sell off. It doesn't matter if it's gold, it doesn't matter if it's stocks. It doesn't matter if it's a stock that should go up when the market goes down. Everything's going to go down because people just want to raise cash. They want to sell off everything they have. I also think gold's going to continue to go up. Gold just becomes more and more valuable the more dollars are in circulation. So that's something to keep in mind. There's been a lot of talk of new stimulus coming out and new programs for individuals and for small businesses. So we'll see how that plays out. But it's really not a good outlook for the stock market right now. There's a reason why I'm in a lot of cash, and this is part of the reason. So if you learned something from this video, hit the thumbs up button, subscribe to the channel if you haven't already, and I'll see you on the next video.